Hello everyone, welcome to the Ichimoku daily analysis for light sweet crude oil for Friday, October the 23rd. Well, a large-bodied red candle today, and that's telling us that the sellers have made some fairly strong net bearish progress on the day between the open and the close. Quite a bearish day for the market, even though the market is still in the first time frame uptrend. Today's candle is, or in bar chart terms, it's an outside day, and fairly close to being a key reversal outside day actually. So very strong potential for a change of trend in the first time frame based on a short-term reversal signal from the bar charts. Not quite a perfect key reversal day, but very close to being that. And in candlestick terms, it's also a potential bearish reversal pattern. It's the bearish engulfing pattern. With this pattern, though, we need confirmation. Remember, we still have a higher high and a higher low, so the market is still in the first time frame uptrend. Confirmation of the bearish engulfing pattern will be a candle with a lower high and a lower low, so we need to see the reversal to the downside in the first time frame with a first time frame downtrend. Now, the bearish engulfing pattern is where we have basically have a bearish day, which follows a decent first time frame uptrend, and the body of the current candle completely engulfs the body of the previous candle. And confirmation is obviously with the bearish engulfing pattern, a lower high and a lower low. So we're waiting for that confirmation. So the low of the current candle becomes very important for this market. The market has opened up towards the high and closed down towards the low, and that's quite negative, with the telling us that the bears have closed in control, and the bears are showing very strong commitment to taking this market lower. The thing that makes this a key reversal in bar chart terms is the fact that the market has closed down below the previous close as well. So quite a bearish day. Looking at this resistance area, the market closed up above the $80 level, which we highlighted as a fairly strong area of resistance. We had previous downside price rejection from there. We had a very large green-bodied candle day, but we had some downside price rejection as the market tried to trade up there. And then we had the small-bodied green candle, which was very similar to being a hanging man pattern. We had a very small shadow on the top, and it's a hanging man. Failed to have confirmation of it with a lower high and a lower low, and now we have the bearish engulfing. So there's a very strong chance, very strong probability that this market will retrace a substantial way into this first time frame uptrend. This first time frame uptrend was very dynamic. Only two red-bodied candles in this whole time, fairly large bodies mainly all the way through this first time frame uptrend. So the momentum that the market had built up there is quite large, and there is potential for the market to retrace substantially there. Now, we know when the market is trending up very strongly and it's built up a lot of momentum, the Tenkan Sen tends to point up very steeply, and we can see here that the Tenkan Sen is quite steep. Quite often the market will retrace to the Tenkan Sen and find support at that level. So if the market does trade down below the $80 level, which is a round number and has held as a short-term resistance, if we do have a substantial bearish close below there, then we need to look to the Tenkan Sen for that next level of support, and that will coincide with where we had some buying coming in from the candle of 2 days ago. That Tenkan Sen is at 77.69, so that's a crucial area for the market. If the market does trade down below there, then we need to look to the big number of 75, which was a substantial area of resistance for the market, and that has the potential to act as an area of support. If that fails to hold, then we have the Kijun Sen at 73.74, which is a potential area of support. Below that, we also have support down at the cloud, which is around the $70 level, also another round number. So we would expect the market to be holding up around there, but I'm not so sure whether the market will be trading down near there anytime soon. Looking at where we're trading in relation to the Ichimoku indicators, we are trading a fair way up above the cloud or the Kumo, which means that the market has a positive bias, and a very strong positive bias. The market is trading above the Kijun-sen and the Tenkan-sen, which means the market is bullish, and the Tenkan-sen is above the Kijun-sen, which means that it adds further weight to the bullishness of the market. So there is potential for a sell-off here. We've highlighted the areas of potential support there, but we need to remember that the market is still in a first and second time frame uptrend. So we know that the trend will continue on its way unless we have evidence otherwise. Evidence will be a lower high and a lower low. If we have that lower high, lower low, then potential for a short-term short trade, but we need confirmation of that first.